Are you seeking 100% financing for a ground-up construction project and realizing that it's not easy to find a lender? In this video, I'll explain a few cases in which 100% financing may be possible, why lenders are so conservative with development deals, and how to find direct private lending companies that do offer ground-up construction loans. I'm Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you are in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. I have to start off by clarifying that 100% financing for construction projects would never include the land purchase. There is absolutely no way any private money or hard money lender would ever provide 100% of the land purchase plus 100% of the development costs. That wouldn't make any sense to a lender. It's only possible to get 100% financing on the vertical construction costs. So you have to already own the entitled land and have approved building permits in hand, which most lenders refer to as being shovel ready. And some lenders will require that the foundation be poured before they fund the loan. Only a small percentage of private lending companies offer 100% financing for ground-up construction projects. The ones that do so only consider residential investment properties in major metropolitan areas. This includes single-family homes, duplexes, triplexes, and fourplexes. It could be a single property or a large development of multiple residential properties. Some will consider small multifamily properties with 5+ units, but it's not for commercial real estate or specialty properties. It's not for cabins or tiny homes that are going to be operated like a hotel. And it's not for a home that you plan to occupy. Even if you're building a fourplex where you plan to live in one unit and rent out the other 3, that would be a consumer purpose mortgage, which private lenders do not consider. There are several other requirements for getting the maximum leverage on construction financing. First, you must have strong financials and liquid cash. Credit score is important even to private money and hard money lenders. Some have a minimum of 650, and some require the borrower's FICO score to be over 700. Besides good credit, you'll need cash reserves in case the project goes over budget, because the lender will not increase the loan amount before the end of the loan term. The reserve amount varies by lender, but it could be anywhere from 10% to 25% of the construction budget. The next requirement is experience with construction projects. If you have not developed at least one property in the past 2 years, it will be difficult to find a lender, especially for 100% financing. Some lenders make exceptions, but it's rare. You could make a case if you hire a reputable general contractor, as well as a construction consultant to guide you through the entire project. Even then, lenders may want you to have at least experience with rehabbing properties. As I mentioned earlier, a very small percentage of lenders will fund 100% of the construction budget. Ground-up construction lending is very risky for lenders. They don't want to take over your project if you default on the loan. The thinking is that if you have a lot of equity invested in the project, you won't default on the loan and won't walk away from it prior to completion. You may be wondering what amount most private construction lenders will fund, if not 100%. I produced a separate video and article to cover the typical guidelines for private construction financing, but here's a short version. 75% loan to cost is the maximum for most lenders, so you contribute 25% of the construction budget with your own cash or using equity in another investment property. Some lenders will also fund the land acquisition along with the construction loan, but only up to 50% of the purchase price. Regardless of whether the lender funds 100% or 75% of the construction costs, the key concern for any short-term loan is a solid exit strategy. The preferred exit is for the developer to sell the property upon completion, but we've seen an explosion in build-to-rent projects starting in 2019 due to record low interest rates. Construction lenders have accepted the rental strategy because there have been many financing options for residential rentals the past 3 years, and lenders have had confidence that their construction loan will be refinanced. Some developers even build properties to become vacation rentals, and that too has been accepted as an exit. However, at the time of this recording in June 2022, interest rates are rising and it's getting tougher to qualify for long-term rental loans. The rising interest rate environment will have a major effect on construction lending. and the 100% loan-to-cost program may not be available when the market turns. In fact, I believe many lenders will stop offering ground-up construction loans entirely, and the ones that do continue to offer them will likely become even more conservative. I'll make another video when that time comes. For now, the key takeaway from this video is that if you find a lender that will consider 100% financing for a ground-up construction project, you'll need to have strong financials, lots of liquid cash, and some experience with real estate development. When you're ready to search for a private construction lender, use our website privatelenderlink.com as a resource. You can browse lender profiles and reach out to them directly. We require lenders to publish their maximum leverage and other requirements for construction loans, so be sure to review those prior to making contact. Once you've clicked on a lender's profile, scroll down to the construction loan sections to see the maximum loan to cost, and some lenders provide additional details in the loan program section. Click the green contact button to find the lender's phone number and a short form to send them an email. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.